So I invested over £21,000 into my stocks and shares ISA over 3 years without missing a single month. Then for the last year, I stopped and I haven't put a single new penny into this account since. So what happens when life throws you a curveball and you have to press pause on your investment plan? Does all that hard work just stop? In this video, I'm giving you my full 4-year portfolio update. I'm going to break down what's inside my £21,000 portfolio, reveal which of my funds performed the best, and I think the answer to that is going to surprise you. I'll also show you exactly how much I ended up with. Most importantly though, you'll see what happened when I stopped investing for 10 months, and I'll explain the crucial reason why I'm leaving Vanguard for good. Let's now get into it. This video is for educational and entertainment purposes only and is not financial advice. Okay, so looking at my tracker, you can see my portfolio is split across 4 different funds. I'll walk you through each one because my choices really do, I think, tell the story of my journey as an investor from the first day up until today. So first up, we have Vanguard Life Strategy, 60% equity. This was the very first fund I ever bought back in December 2021. I started with £175, thinking I was being smart and balanced. But honestly, after 2 years, I realised my mistake. This fund is 40% in bonds, which are generally less risky than stocks, but also tend to have lower returns. For my long-term goals, this was just a bit too cautious as I was leaving potential growth on the table. Despite that, it's still actually done pretty well. The value of this fund is now just shy of £9,500, giving me an unrealised gain of £1,841 and an annual return of 8.4%. It's a solid, positive return, but as you're about to see, this was by far the weakest performer of the bunch. Next on the list is the US equity fund. Let's be honest, it's no surprise I jumped on the US bandwagon. It's home to some of the biggest companies in the world and its performance has been incredible lately. I started with £100 a month, but as I got more confident, I kept increasing my contributions, eventually putting in £350 a month towards the end. My belief in this fund grew, and it had good reason to. The value is now at £9,127 with a fantastic unrealised gain of £2,227. That works out to an average yearly return of 14.9%. To give you some context, the historical average for the global stock market is around 10% a year. So anything outperforming that is doing really, really well. Okay, now for my real curveball investment, the ESG Developed World Fund. ESG stands for Environmental, Social and Governance, and at the time, investing in it felt like a bit of a punt. I kept my contributions modest, and honestly, I wasn't sure how it would perform, but the result was insane. It actually outperformed my US equity fund on an annual basis, coming in with an average yearly return of 15.5%. The fund is now valued at £1,331, giving me a return of £281 on a relatively small investment. It just goes to show you can never be certain where the growth will come from. This brings me to my 4th and final fund, the FTSE Global All Cap. And this one is almost poetic because I think it perfectly shows how my investment strategy has changed. It's the one area where you can see how I went from cautiously dipping my toe in the water to confidently diving in. I only started investing in this one 2 years ago with just £50, but I quickly realised that a single globally diversified fund was the simple but effective strategy I was looking for. Soon I was investing £500, then £600 a month into just this fund alone, and I'm so glad that I did. The current value is £6,445, giving me an unrealised return of £1,070. And the best part? It's the highest performer of them all, with an average annual return of 15.6%. Seeing this really validates my shift towards keeping things simple and global. So let's put it all together. From a total investment of £21,011, I made an unrealised gain of £5,420 in just under 4 years. That works out to about £118 a month in average passive returns, or money my money made for me for no work at all. I'm so proud of that. But the most important part of this story is what happened next. As I mentioned, I stopped contributing to this account about 10 months ago because I quit my 9-to-5 to follow my dream of building this channel and helping people with their money. When I stopped, my portfolio was valued at around £25,000, and since then, even though I haven't added a single penny, it's grown by another 1,331. The lesson here is so powerful, I think. The hard work you do at the start doesn't just disappear if your circumstances change, but by staying invested and not panic selling, my money kept working for me because of compounding. You know, looking at my tracker spreadsheet and seeing every single monthly contribution laid out like this is actually incredibly motivating to me. But this sheet does something more important. Annoyingly, every investing platform I've ever used calculates your rate of return differently. It makes it almost impossible to get a clear apples-to-apples comparison of how your investments are really doing. So with the help of my boyfriend, we built this tracker to solve that exact problem. It calculates a simple annualized rate of return for every single investment, which means I can directly compare my US equity fund against my global all cap, or even see how they stack up against a simple high interest savings account. And we're planning to make this tracker available to you all in the next few weeks. If you want to finally get a clear picture of your own investment performance and be the first to know when it's released, I've put a special sign-up link in the description below. But this brings me to my final crucial point. Why might this be my last ever Vanguard update? The reason is simple: fees. Now, to be fair, Vanguard has recently decreased the fees on some of their funds, which is a good thing. However, the real issue for me is their platform fee. Vanguard charges a flat account fee of £4 a month for portfolios under £32,000. Compare that to platforms like Trading212 or Invest Engine, which have no account fee at all. And here's the key thing. You can still buy the exact same Vanguard funds like the FTSE Global All Cap on these other platforms. You get the same investment just without the extra platform cost. For a new investor or someone with a smaller portfolio, those fees can really eat away at your returns. It's a perfect example of why you always need to keep an eye on the costs. My journey with this account has taught me so much, that it's important to start even if it's small, that you can evolve your strategy as you learn, and most importantly, how crucial it is to stay in the game for the long term, because your money will keep working for you. If you want to see how I'm simplifying everything and building my portfolio for the future, you need to watch this video right here. Thank you so much for watching. If you enjoyed this video, feel free to subscribe so you can see me in the next one.